You should be able to see the poll for today. We are going to be getting a few earnings today. So we are getting earnings from Google as well as Tesla. Now, what we need to see is whether they turn out the way we're expecting them to. So let's see how that happens. You have Tesla earnings coming in today. You have Google's earnings coming in today. So that would actually be fun to watch and see what's happening there. Uh, Let me just go ahead and see if you guys are able to see everything. You should also be able to hear me. I mean, let me just see if I'm connected on the. Yeah, my voice should be coming clearly as well. You had some news that came out today. You saw the Americans and the Japanese have a trade deal that went through today. So that is one good news that's been coming out at this moment. Let me also go and put the link up on Twitter. So everyone from there can join us as well. Let me see if I have. There you go. Yeah, I think it should be up on Twitter also pretty soon. Yeah, so let's try breaking it down bit by bit. A few things that I had written down uh, is few things that are currently happening in the market, especially with the Japanese US trade deal. A lot of people are not really understanding the concept behind how beneficial that can be, how beneficial the trade deal can be. A lot of it is to do with people not really researching and figuring out as to how that plays out. But before that, let me just give you a brief on what it looks like, what's happening with the market. At the moment, the NASDAQ is looking like it is going to open 42 points higher. Now, the only reason why it's opening higher is because you are seeing some bit of. Oh, let me actually change this because this is supposed to be. Yeah, perfect. So you are seeing some bit of a move coming on the NASDAQ. Now, that is happening purely because of the US China, the US Japan trade deal that took place. So keep that in mind because you are looking at, and it's a great trade deal. If you actually go down and look at the whole scenario as to how it's working for Japan and America, uh, in all seriousness, it is great for America. There is an innovative financing scheme that has worked within these tariffs. So if you go in and read the entire trade deal that is put out on the website with the White House, you will see something that is stated as an innovative financing deal. Now, what is that innovative financing deal? If you think about it, this is phenomenal for it to happen. So, Japan was never going to open up its markets to Americans. It was never going to be in a scenario where they were going to be like, okay, you can come in and sell your car, you can come in and sell whatever you want, and we'll be okay with it. The Japanese usually, however long back you have gone back, you will see that they are a very closed economy. They don't like competitors from other countries entering in while they want all of their cars to be sold globally, right? So they want all of their Toyotas and Mitsubishis and everything else to be sold globally. So what Howard Lutnick, Scott Bessent, and Trump came up with, which is actually phenomenal if you think about it, is they said that whatever is a factory that they deem, which is the Americans deem as national security, they would basically go in and what they would do is they would say the Japanese would be funding that. So if they want to build a $500 million semiconductor plant in America, the Japanese would come in and give the $500 million in order to build it. At the same time, now that the company behind who makes the semiconductors could be Nvidia, could be anyone, right? There could be any country also that wants to come in and build it. But the Japanese would be funding it for a factory built in America, and 90% of the profit that is made on that factory would necessarily be kept by Americans. So remember, what Trump got with that Japanese trade deal is basically this, that he said the money comes in from Japan, and 90% of the profit made on the factory that makes jobs in America, that has construction in America, that makes profits in America, 90% of that is going to be kept by the US taxpayer, which is at the end of the day the US Treasury. 30% of that would now be, 10% of it would go back to the Japanese. So the Japanese fund 100% and they basically get 10% back. What do the Japanese get in return is one, they get a lower tariff rate. So they're being tariffed only at about 15%. They also have to buy 100 Boeing planes. So they said they're going to be doing that. From what I read, they'll also be going in and buying $50 billion worth of agriculture every year. So there's that much amount of agriculture that the Japanese are going to be buying now. Put that into perspective, that is a phenomenal deal for America. Whoever came up with this deal for America is just brilliant. Like if it is Trump, I am in all seriousness going to agree to this concept that he's nailed it when it came to this concept of the Japanese US trade deal. There is no bullshitting about this fact, trying to say that, okay, they're doing well, they're not doing well, and all of that. This trade deal is just brilliant for them, right? So, all said and done, this is just perfect for them. The Japanese trade deal is a win for America. For Japan, yes, it is a win because they will be buying American products, they will be selling their cars as well. American cars will be entering into Japan as well. Keep in mind, Japan has usually been a closed economy. And to some extent, right now, what they're coming up and saying is that, hey, uh, we will fund everything that needs to get built in America for national security of your company, of your country. And you give us 10% of the profits, you get to keep 90% of the profits, and we will fund the entire amount of money. So it's basically like a America basically being like a hedge fund manager. They basically get all the billions of dollars and they keep 90% of the money. It's just that they get the entire profit sharing. Instead of a 80-20, they get a 90-10, and 90 is being kept by the fund manager and 10% is given back to the Japanese. So it's actually a great deal for the Japanese. Anyways, that being said, if you actually go in and see, Japan by itself has a lot of drama to deal with among the Chinese and Japan, right? So the Japanese also need American powers to be around that area. So in a way, it does boost collaboration on critical technologies for them. So when you look at semiconductors, when you look at AI, when you look at cybersecurity, all of this plays a big role in order to counter the rise of China. So the superpower within Asia, other than China, would be Japan and India, but to a large extent, the Japanese are more worried about the Chinese interference when it comes to semiconductors, AI, and cybersecurity. So, in all seriousness, this deal pretty much cements them from worrying about all of these issues that come in. And in a way, the American support on Japan also works because Japan gets a 15% rate. So Japan doesn't really have to worry that much about a 20, 25, 30% rate that the other guys have been getting, right? So if you logically think about it, it's a win-win for both sides. I would say the win is more for America just because of the fact that they can deem what is national security. They can deem what they want to sell, what product they want to build, what factory they want to build as well. And at the same time, they can also come in and be like, hey, 90% of the profits on the factory that you paid for is for me to keep. So that works for the US China trade deal pretty well. That being said, Japan doesn't have a great semiconductor business. They have a great electronics business, not a very good semiconductor business, as great as America, is what I'll say. So all of the US semiconductor firms, they're expected to benefit because of increased Japanese subsidies, and you're going to start seeing supply chain reliability. Remember, a lot of the uh, ancillary products to building semiconductors comes from Japan. So you are going to see a lot of these products that come from Japan having supply chain reliability. Now that I know as a manufacturer for Nvidia or as a manufacturer for AMD that I can get my products from China and I know the rate is 15%. I don't have to dilly dally about would it be 25, would it be 35, will there be sectoral tariffs? It's pretty simple, right? It's a $550 billion deal. The tweet that he came out with was clear. It just said that Japan will open up their country and Japan will pay 15% in tariffs as reciprocal tariffs. So it's pretty much a win-win for both if you think about it. Militarily, industrial ties both on both these guys is now stronger than ever. So you are going to see both of that play out as well for them. You will also be seeing economic and security alignments between the two countries, because they both are going to agree now that China is the one that they need to control. And what Trump and everybody else within the administration is trying to do is basically say that, hey, China, you are 30% of the world's export, 30% of the world's manufacturing. We want you to reduce that. We want you to start being a consumer rather than an exporter. Basically, if the world has a larger reliance on China, China at the flip of a switch can turn the table and start causing problems globally. So they realize that today and they're acting earlier because they're realizing that the only way to counter China is for all of these countries to come together, whether that be Japan, EU, India, and the US. Quite possibly that could be a scenario that's there, including Australia. The Philippines and Indonesia also had their deals done. So you saw the Philippines getting, I think, a 19% tariff. The Indonesians also got a 19% tariff. I think the Philippines had a 20% tariff, but I think because the president went in there, met, they dropped it down a percent, 19% tariff for the Philippines. So a lot of these trade deals are happening. Uh, Howard Lutnick, from what I remember watching a video, he came on Bloomberg or he came on Face the Nation, and he came out and clearly said that this week you are going to be seeing a large number of trade deals going through. It'll be like a record for the amount of trade deals that are happening at this moment. And what you can clearly see at this moment is that yes, Philippines happened yesterday. Indonesia also happened last week. You also did see Indonesian trade deal getting ratified this week. You have seen Japan happening, and Japan is one of the largest trading partners, so that is important for America. You are now looking at India and the EU. These are the two countries left. An update on the US China talks is they are going to be meeting in Stockholm or Sweden. I think, yeah, it's Stockholm itself. And Scott Bessent and Howard Lutnick both are traveling there. They're going to be talking about trying to get this deal done. You know what's going to happen? No framework of a deal. Nothing's going to happen. They're going to extend the date and keep saying that the tariffs that were supposed to be coming on August 1st and August 9th for China is now extended to, let's say, September 15th or some other date. Remember, none of these are trade deals. These are all deals, just frameworks to tell each other that, hey, we're not going to tariff the shit out of each other. We'll tariff each other later. But if you don't agree to what I'm saying, then this is the rate that you're going to pay overnight. So, to a certain extent, these are all just tactics to keep delaying this. This is something that I realized somewhere around April when they started doing reciprocal tariffs of over 100%. I started realizing, and even on the live, I was continuously saying that, hey, it does look like this is just bullshit. It's not going to eventually lead to a full blown trade war. The reason why it's not going to lead to a full blown trade war is because it does look likely that a lot of this has to deal with the fact that who's the stronger person in the room. Now, each of them can keep playing around saying, here's a rate which is higher, here's a rate which is lower, this rate is higher, you're going to pay 100, I'm going to pay 125. No one's going to be able to deal with that, right? They had to bring it down because they realized that both the countries can't be dealing with that kind of inflation if it does turn out to be that way. At this moment, we aren't seeing inflation picking up, but do remember, if you actually go down and read, so don't read only the headlines that you see on newspapers, because a lot of the newspapers have been coming out and saying that inflation is lower. The reason inflation is lower or steady is because tariff based inflation has picked up on goods, but shelter, rental, and home inflation, home price inflation, right? Shelter and rental inflation used to be the largest mover for inflation within the index. That has, for a long period of time, was staying steady. So it was keeping inflation higher. Now you're seeing that come lower. You are also seeing that come lower because a lot of people are not buying homes because prices are too high. A lot of people were not ready to sell their homes because they were not ready to lose price. And they kept thinking their houses would keep going up in price. As of the past few weeks and past month, you have seen prices being lowered on houses. So shelter inflation has come down, and that is affected. So when shelter inflations come down and goods inflation's picked up, you're pretty much getting an effect that negates itself. So it's staying at that same rate on the inflation side. When inflation stays steady, you're going to see Trump and everybody else keep screaming, saying that they should be lowering interest rates. Here's the thing that happens: should they be lowering interest rates? For sure. Why? Because the housing market has pretty much been at a dead stop. No one's buying a house, no one's selling a house. The interest rate is too high, and you can make more money in the stock market than just buying a house and renting it out at this moment. Yesterday, we got some news, and we'll talk about the stock as well. We got some news from the White House, and Trump was asked this question about the housing market, and he said that he is looking at giving a no capital gains tax for somebody that wants to sell their home. And if they're single filers, which means they're not joint, as in not husband wife filing together their taxes, but a single file, and that means either the husband or the wife. And when that happens, they're ready to give up to a $500,000 capital gain exemption. Now, a lot of people in America might not be having a $500,000 gain on their capital asset. So that's like saying I bought a $500,000 property, and if it's worth more than a million, if I had to pay a 20% tax, that means on my 500K, I would be paying 100K in tax. Now, maybe if Trump goes ahead with this would now be brought down to about zero. None of this is passed. I'm not sure if this is even going to get passed or happen. But yesterday, when I was reading this, the National Home Builders Association came out and said that 29 million American households would be having a capital gain in excess of $500,000 and can benefit from this. If this does happen, it's going to lead to a boom in the GDP, and with lower interest rates over the next year, you will start seeing housing activity pick up. If housing activity picks up, you are going to lower and two together. And when you put both of those together, you are going to start seeing this concept where you will technically, to a large extent, figure out that a company like Rocket, which is seems to be literally going up like a rocket. Now, again, this is not financial advice. I have not gone in and bought these shares, and I've been talking about it. So the only thing I did was talk. I didn't put my money behind it, so there is no. That's just financial disclosure from me. So don't go and buy it just because I'm saying so. But the stock used to be trading at about $13, $14 about 2 to 3 weeks back when I was talking about this concept over a year and a half, because I was saying this that over a year or maybe 18 months, if the Fed keeps reducing its interest rates, the biggest beneficiary for this situation would be Rocket, because Rocket gains a lot from lower interest rates because people would refinance their homes. If people refinance their homes, the guy who makes money in this is not just the bank, is the person who is the largest mortgage refinancing provider. What do I mean by mortgage refinancing for everyone that wants to figure this out? Is if you have an interest rate of, let's say, 6% on your home which you have bought, now you have a mortgage on it. If the interest rates drop to, let's say, from 6 to 5, you could go in and refinance at the bank or towards Rocket, who is the largest refinancing company in America. So, which means you save a percent on the $500,000 property, $1 million property, $10 million property. You save a percent. Now, that's a lot of money over 20, 30 years, right? So, that refinancing boom can cause a stock like Rocket to go crazy. Rocket was at $13. As of yesterday, it was at $16. So, in about 2 weeks, it's gone up $3, which is about 20-25%. As of pre-market today, it is up another 8%. So if you look at it that way, it's pretty much at $17.32. So let me actually see how much percent it's actually moved. So if you're looking at it from the 19th of July, which is about 4 days back, the stock is currently, as of yesterday's close, up 17% and would be up about 24% as of today, if pre-markets levels hold, right? Uh, Putting that into perspective, that is my view on the interest rate scenario. I am not going to be a buyer of Rocket at this price. If it drops down to 14, 15, possibly I will buy. You do not need to catch every train. Like I keep saying this, you don't need to go to every party every night. You must leave before everybody leaves. And it's the important part of a bull market is to remember when to take your chips and leave. That is a very, very important part, because please do remember there is a large phenomena that people keep thinking that, okay, I can move from this train, I can move from the today the stocks that are going up is GoPro and Krispy Kreme. It's up 40-50% in pre-market. Yesterday it was Open Door. Day before yesterday it was Coles, KSS, for everyone that wants to go and check. The day before that it was Open Door. The aim is not to catch the fastest train. The aim is to catch the train that goes the furthest. That's how you make money. It is not where do I get 30%, where do I get 20%? Because remember, look at something like Open Door. It was trading at about $5. It's down to about $2.82. Now, I don't know what it's at today. It could very well be back to $5, but I do remember seeing it below $3. Now, if you go in and look at that, you're going to get a heart attack if you have all of your money kept in stocks like this. So just bear in mind that it's not, yeah, $2.59. It's down 10%. The stock was at $5. So you have literally, in about 2 trading days, you've fallen 50%. Now you can come back and tell me that it was a 50-cent stock that has gone up 10 times to $5. Many people do not play this 50 cent to $5 game. Most people would have entered at $2, $3 or higher, thinking it's going to go to 10, right? Uh, Again, this is a very small company. It's a $2 billion company. So a lot of people also would be holding it from sub $40. Exactly 3-4 years back post COVID, this was a stock trading at about 39. 39 today trades at 2. So if $1 or half a dollar stock goes to 4, please do remember that it's fallen from 40 all the way down to 2. So don't just jump on the next train that you see. Sometimes maybe just buying companies that are decently valued and have growth potentials is the smartest thing to do. Anyway, so that was my small brief on Reddit. Uh, in other news, we do have Tesla and Google coming out with their earnings tonight. So post market close, you will be seeing Tesla and Google coming out. Uh, there is a poll for you guys to answer. The question is, what will have the biggest impact on markets this month? It could be Tesla earnings, it could be Google earnings, could it be Fed commentary, or could it be global headlines? Please go ahead and vote. Most people that have voted now, which is just 2 out of 3 have said global headlines. My bet is on Google's earnings, and I'll give you a small example on why I believe Google's earnings is important. It is not important because of the Mag 7, it is not important for the health of the rally. It is important to know about the consumer. Google's wings are spread pretty wide. Not only does it control the whole search engine, but it also does control a large portion of the ad market. So when you see YouTube, when you see Google's ad business through YouTube, when you see Google's ad business through their search engine, a large part of that growth is important. If companies continuously keep spending money on advertisement, it is usually, and I've said this on the live the previous day as well, it is usually the most important indicator of an economy is the amount of ad spending that is currently being done by companies. If Google comes out with great results and you do see a large growth in their ads business, remember that that would entail great results possibly for the trade desk as well as Reddit, two stocks that I do own and two stocks that possibly could do well if Google's earnings are better. Now, why is that a situation for both? I'll explain. Reddit is turning into a search engine where a lot of links are currently seen for a lot of people on their Google search. When you go out and do a Google search saying, what's the best phone? What's the best hotel to stay at when I travel? What's the best seat to sit on when I'm traveling in business class or economy or whatever you travel in? A lot of the answers are usually found on Reddit. And Reddit as a platform does not require you in order to sign in to view. So you don't have to be a logged in user. You don't have to be a user that continuously is like, you're not bombarded like when you're on Instagram or Twitter, where in order for you to view a small tweet or to view something, you need to now create an account, right? So I believe that is a standout feature of Reddit, which is going to be eventually over the years getting more and more people onto Reddit. A lot more people would be joining Reddit, not just for that reason, also for the search engine optimization. Reddit as a platform has not been gung ho on advertisements, but they have been picking up in marketing and advertisement budgets in the past few quarters. They have hit 100 million users. They are nowhere even close to being as big as Meta or Alphabet or any of these companies when it comes to number of users. But 100 million users is a lot, right? And these are daily actives. Weekly active users would be about 400 million. I use Reddit a lot. I find it to be exceedingly beneficial in order for me to get information, especially things which I believe are problems that humans face, which an AI cannot understand as of today. Secondly, talking about AI, a lot of the LLMs, Google and OpenAI, get a lot of their source based links from Reddit. So, Reddit provides the data and the brainchild behind a lot of what you see on Google and OpenAI, for which Google and OpenAI, about 2 years back, just before the IPO of Reddit, were paying Reddit about 150, 160 million US dollars, somewhere in that ballpark figure. Now, that is up for renewal next year or the year after. Eventually, as I am a long term holder, I do believe that these numbers are only going to go higher. Reddit's use case for AI companies is only growing day by day. Remember, the problems that humans face are the answers that we go to as humans to find on these AI engines. These LLMs don't get information out of anywhere, they take it from sources like us itself. We provide them with the data. How do we provide them with data? They take it from text format from these places like Reddit. So the use case for Reddit will only grow over time as more and more users start spending more time on Reddit, start dealing with problems on Reddit, start solving those problems on Reddit. As these things grow, you will see Reddit's active users increase. Remember, where the eyeballs go is where the advertisers go. So that's where you are going to see advertisers going and spending all of their ad budget now. Even if they move 5% of their ad budget from an Instagram onto Reddit, it's a big boost for Reddit. It's only a 25, $27 billion company. You're looking at Meta and all of these at 1.5, $1.7 trillion. So you can do the math, right? At the end of the day, even if they can capture 2 to 5% of this ad budget, they can move from a 27 billion to a $100 billion company. Please don't go buy the stock just because I'm saying that I own it. Go do your own research. If you like it, buy it. If you don't buy it. My scenario with Reddit is the fact that the 150 million that Google and OpenAI have been giving Reddit, I believe will only keep increasing. It could hit 300, 400 billion or higher. This is my math, right? Eventually, a company like Meta and everyone else who are creating their own LLMs, everything else around it, would also be paying money to Reddit eventually. If they can spend 100 million, 200 million on getting a single guy or a few guys from these different companies to come on their board and create the super intelligence that they've been saying they're looking to create, imagine how much they can be paying Reddit as being a large source of information on the internet that helps their LLMs get better. Remember, AI is not like the mobile phone where you're going to get an update every year from Apple or every year from Samsung. AI is an update every day. In order for it to be an update every day, you need to spend the largest amount of money and you need to find the best sources of information. At the moment, one of the best sources of information for the internet and for these LLMs to basically claw, right? And while they would be going crawling for all of this information, is Reddit. So Google's conference call would be a lot more important because it would tell us how the advertising business is doing, how their AI LLM is currently doing, which is currently the best LLM available, Gemini. And what it would also tell us is on the health of the ad business would also be telling us the health of the consumer. Put all of these into perspective, what you end up realizing is that there is a large amount of benefit that you would get by seeing how much of a growth does Google's ad business have as a direct correlation to the US economy. Now, I'm not saying that if Google's numbers disappoint, the American consumer is dead. What I'm saying is, if the ads business is not growing as fast as people imagine it to be growing, that could be a question to ask. In the today's age, companies' stock prices are going up and down based on the amount of capex spending that's happening. In about 12 months, 18 months, 24 months, eventually the street will look for how much return is this capex giving. That is important. Remember that. So, how does that play out as a business model is of paramount importance for a company like Google. For them to stay relevant, for their search engine to stay relevant, they need to make sure that at all points of time, their business model has ad money coming into it, flushed into that system. Now, if that were not the case, Google would not be trading at about $190 a stock. Now, let me actually check what Google's trading at, but from what I know, it's about 190 or higher, $192, and the previous high was just about 8% away from an all-time high. Now, we could be up 5-6% in overnight markets once the earnings do come out. So don't be, let's say, too gung ho about the fact that this could not break into an all-time high. It could very well break into an all-time high. Okay. Point necessarily being Google's advertising business, YouTube's advertising business would also be telling us the strength of the trade desk. The trade desk works on the ticker TTD. What is TTD? TTD is basically a digital advertising ad tech platform. Now, in simple English, every time you see an ad on the internet, every time you see an ad on any of your streaming channels, when you're on Disney, Netflix, Paramount, Apple TV, any of this, usually you see an ad supported version or you have a non ad supported version. Irrespective, sometimes you do see ads. Whenever you see ads, it's quite likely that one of the companies that's providing the backend to the ad platform is the trade desk. So it is the largest, I would say, if not the largest, at least maybe after Google DSP, it could be the largest ad tech platform on the internet for connected TV, which is CTV, right? So the trade desk had about, just a brief, it had about 32 to 33 quarters of beat and raise, right? So what it did was the stock used to keep heading higher, and TTD used to trade at, let me actually tell you what, it used to trade at about $3, $4 in 2018, 2019. It went all the way from in 2018 from a few dollars all the way up to about $141. Now, the reason you saw this large move happen on the trade desk was because many people shifted from cable television to connected television, which is having the internet on your phone, having the internet on your apps, which is, let's say, YouTube, Netflix, Disney, Hulu, Paramount, Apple TV, whatever you like. Because of which, you were able to see a lot of this move happen for the trade desk, moving from a $3 stock to a $150 stock. 32, 33 quarters passed by. This company kept beating estimates, kept moving higher. Stock kept rallying. Eventually, what I realized is that it's a great company, founder led, Jeff Green, one of the best guys you can find out there to run a company. That being said, in the quarter that went by, actually 2 quarters that went by, they missed their estimates by a few million US dollars. Now remember, this is a company that is about, it has just entered the S&P 500. Please do remember that. So it's a great company. It trades at about $40 billion of a market cap. So a $40 billion market cap that just maybe missed estimates by a few percentage points. It's not like they missed estimates by, 15, 20%. But for a company that has been beating earnings for the past 32, 33 quarters, When they miss, it's a big hit. So the stock dropped all the way from $140 all the way down to like 37, 38. Yeah, $42. Sorry. So it dropped all the way from 140 to about 40, 42. At that moment, I started realizing that there might be more to this story because it could necessarily be that this company is actually pretty decent, right? They just missed by a few million. Anyways, fast forward to today, the company reversed back. $42 share trades at about $82 now. You have seen a large move happen on this stock. Now, why did you see that happen? They came back, and in the next quarter, that is the quarter that just went by, they basically beat estimates, rallied, and flew through the roof. Stock was up about 20-25%. Today trades at about $82.28. So we've already seen about 100%, close to 100% rally in the past few months. Granted, a lot of stocks have seen that, but do remember the stock is 72% away from its all-time high. So it has a lot of catching up to do. Why am I saying all of this? Is because there is a large move that I'm expecting from a $140 stock that's now down to 82. It could very well go back to its 140, 142 levels. Why will that happen? Is if it continues beating its estimates and starts basically doing better in its performance as a company. Google's earnings and Google's ad business would basically tell us that if the ads business is doing well, then necessarily Trade Desk and Reddit, who also make a lot of money through ads, from selling ads for Trade Desk and from the back end of providing ads for the Trade Desk, it could very well be a barometer as to how the companies do. Now, let me just get to some questions. Well, you are Indian like me. Okay, any tips for business? Make money? Is chartered accounting worth it? Yes, it is. Okay. So yeah, so markets open. Let me just get that. Flat on the US 100, so which is the Nasdaq is up only about 17 points. The Dow is again up to 40. The Russell is up about 0.7%, so that's actually better. And the S&P is up 0.34. Tell me more, please, buddy. Just do it. It makes you think smarter, and you'll be able to understand balance sheets. Eventually, you'll understand economies. Eventually, you'll understand companies, and you can make money if that's the reason why you're doing it. Anyways, so that's the Google story on the advertising. We also covered Rocket. Now, potential Fed rate cut or a pause and increase in home sales will lead to Rocket actually doing better. Let's actually go check what's happening with Rocket. That'll actually be fascinating to see. Rocket is was up about 8-9%, is right now flat. But remember, it's gone up from about $13 all the way to 16. But in today's craze of what all's going on in this market, please do remember that anything and everything can happen because there's a lot of meme stock craziness that's currently ongoing. Anyways, in more important news, let's also get on the US, Japan, which we already spoke about. So they're going to be buying about $550 billion worth of product. Let me actually see. So the S&P starts green, the Nasdaq's flat, the Dow is in the green, and the Russell 2000 is in the green as well. We need to talk about the Russell 2000 for a bit, so I'm going to do that towards the end of this segment. And it's important to measure what has currently happened in Japan, not on the trade deal scenario, but what's currently happened on the Japanese side on the stock market and why their stock market is currently doing well. And it's actually important to actually sit down and talk about it because we need some of that to be happening. Anyways, Uber is launching a new feature in the United States that will let women drivers and riders request to avoid being paired with men. Okay, great. Let's actually see what's happening with Uber. I had no idea that this is even going to be happening, but anyways. Hmm. Yeah, Uber is flat 91.85. It's actually had a great run all the way from $60 a few months back to now about 91. So that's actually been doing pretty well for Uber. For anyone that owns it, fab job done. Good stuff going there. Let me actually go and see what else is currently going on. Hmm. Yeah, Rocket's up about 1.5. I don't have any money in it. AMD is actually picking up 1.6. Remember, AMD was a stock that wasn't doing well yesterday. You saw a lot of move from growth to cyclicality. The Nvidias, AMDs of the world yesterday pulled back. AMD at one point of time yesterday, even though it closed only 1.45% down, it closed at about 154, but it made a low of 149. Remember, so there was a lot of selling that happened on these semiconductor names. But yeah, be that as it may, it's not really that important at this moment. But let's go over one of these things that happened in Japan, right? And then we'll call it quits for the day. I don't want to keep this going forever. But this is something that happened in. Okay, we got a question. What do you do? I invest, bro, in the US, and I spend time talking to you guys in the evening before the market opens to explain what I believe is going to happen in the markets in the long term, sometimes in the short term too. So make sure you subscribe, go ahead and vote, and do everything else that everybody else tells you to do on YouTube. Thank you so much. Okay, so the stuff that happened with Japan was actually pretty interesting. We'll talk about this when we have on the live tomorrow or day after as well. But this is what happened with Japan. The Japanese government as well as the regulator eventually came to an agreement saying that we need to go down to all these Japanese companies, small cap companies that are currently trading, or any companies that are currently trading at one time below their book value for years together, and write them an email or whatever and ask them what are they doing to fix this. Now, this is very new for a regulator to go and ask companies saying, how are you going to fix your company? Because your stock has been dead all this while. You're trading at less than one time book value. Why is this happening? Fix it. And how are you going to fix it over the next period? Please go ahead and let me know what's happening there. So that was phenomenal when I saw that happen with the Japanese regulator. They are usually guys that are not shareholder friendly as companies, they're stakeholder friendly. For that regulator to come out and clearly say that if you're a small cap company, go ahead and tell me how you're going to fix your books. You need to give me a plan in writing. Now, all these companies had to come out and give their plan, right? Sean says taking the initiative. Exactly. I mean, at the end of the day, they are supposed to, right? So it's actually phenomenal that they did that. So what eventually led to this is the stocks of all of these companies, once they came out with a plan saying, okay, in the next 2 years, in the next 5 years, this is what's going to happen. And a lot of this went under the rug. A lot of people don't realize because they don't read news. And most of them just read what you see on Instagram. So stop wasting your time on reels and start looking at real information. But in all essence, what was playing out here was the Japanese stocks picked up and the Nikkei as of today and yesterday hit an all-time high. Granted, this is not the only reason, but a large part of it within the small cap space of Japanese companies has been picking up purely because of this reason that the regulator comes out and says, why are you trading below book value? Why is your stock not doing well? Write to me and let me know of a plan as to how are you going to fix this. Now, the reason I'm talking about this is not because I'm invested in Japanese stocks. I have no investments in Japanese stocks. What is happening is the Russell 2000, the New York Stock Exchange, and the NASDAQ have shitloads of companies, small cap companies that are just dying in the doldrums. They trade at less than 50% of their book value. Some of them even less than 10% of their book value. Write an email or write something where you're basically able to tell them that, hey, listen, stop this. Give me a reason as to why we should not be delisting you. Give me a plan as to how are you going to recover this company? How are you going to make sure that this company starts going higher? Go back and look. Each one of you, go back and look. And I've been saying this since before. So make sure you subscribe to this live because I've been saying this on the live for almost 3 months or 2 months now. Go and look at the Russell 2000. It has been underperforming the S&P since COVID. Go and look at the Russell 2000. It's been underperforming the NASDAQ. It's been underperforming the Dow. Even this year, all of these other indexes are at all-time highs. The Russell is still 9%, 10% away from an all-time high. Why is that happening? Because the Russell 2000 now has these regional banks, it has these smaller companies that just don't seem to be getting the memo about this fact of AI or getting any of it that's needed for them to be actually doing well. Now, If they can get this done in America, if Trump could just write a letter or get something done here where he's able to get these Russell 2000 companies, the S&P 2000, S&P 500 companies, or the Nasdaq 100, you don't need to get the top 100 or the top 500 companies because their views are already pretty clear. What you need to get, more importantly, is all these other companies that are trading at, let's say, less than 1% book value, less than half book value, or less than one time book value, and ask them, why should you be listed? Why shouldn't we delist you? Fix your books, fix your capital expenditure plans as to how are you going to grow this company back again? Why is this company going to grow? If that is the case, and if that is going to happen, you will see the Russell 2000 actually picking up. Remember, in a bull market, small caps do better than large caps. In the past 5 years of a bull market, large caps have been doing better than small caps because American small caps are just dilly dallying around and not knowing exactly what's going on. They missed the COVID rally, they missed the AI rally, they missed all of these rallies that were supposedly happening. And they've just not been part of it because they've just slept through it. So Japan coming out and their regulator, out of all the people, for a country like Japan that is so stakeholder friendly and not necessarily just shareholder friendly, coming out and doing this is actually pretty, I would say it's pretty strong for them to come and do this, because this actually tells the whole world that, hey, you can get things fixed if you need it. And that is important because if you can fix the Russell 2000, you can get the smaller companies to actually do better. If you want to fix the deficit in America, you need the small business and medium business to start doing well. They need to start hiring. They need to start, and they're not the ones hiring. Remember, it's the large caps that are hiring. It's the Metas, Amazons of the world that are hiring. So if you get the smaller cap companies coming in and hiring, if you start seeing them giving better salaries, you're going to start seeing the lower and middle class of America actually doing better. GDP growth increases with interest rates that are lower. You can now balance the deficit easily, considering you're getting in more money from the tariffs any which ways. So that what Japan is currently doing is, according to me, phenomenal. I think the Americans should do it, but who's listening to me? Anyways, so thanks for joining in today. At the moment, the Nasdaq is flat. Everything else opened the way it's supposed to, what pre-market was. You're not seeing too much of a move up front. And we shall connect whenever there is news in the market. Anyways, thank you for tuning in, guys. Take care. Enjoy.